Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about what's the probability, the likelihood that the Bank of England cut mortgage rates tomorrow, or cut their base rate at least, and what impact will that have on your mortgage going forward? Are rates likely to drop further this week, or did lenders already price this in? We've also got to discuss the Federal Reserve. They have their interest rate meeting today, and that will impact the UK or the Bank of England's decision on what happens going forward. So if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 42,000 subscribers. We just hit 41, so thanks to everyone that does that. And let's get some more views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to the like button. That helps with the YouTube algorithm. And then share this video, WhatsApp it, email it, or Facebook it to somebody that needs to know what's going on with interest rates right now. So, what a day. So firstly, we have got the Federal Reserve going today. And the expectation is that they will hold interest rates. So the Americans, the Federal Reserve, the central bank there, they're currently at 4.25%. Now, their economy isn't looking very strong at the moment. They just had first quarter data out and it was a contraction of 0.3%. So it's moving in the wrong direction. And potentially the next quarter could be even worse because the tariffs are starting to hit. Right now, goods coming in to the country from China and other countries are down massively. Some ports are quieter, significantly so, that they've got 40% less goods coming into the country. Now, that's going to slow down the economy because businesses use those products in order to make products and service or to sell on. And if they don't have stuff to sell, obviously that's going to make some sort of contraction with their economy. Now, in that sort of scenario, normally you'd cut rates and the Federal Reserve would be ahead and they would be cutting rates, moving forward and making sure to revitalize and kickstart the economy again. But the problem here is that these tariffs are expected that they will be inflationary, and no one really knows how much prices will rise in America. And so the Federal Reserve is caught in a difficult situation. The economy is slowing down, so they should cut rates in that scenario, but tariffs are meaning prices are expected to rise significantly on a lot of products, so they can't cut rates, and that's a difficult scenario. Now, the Bank of England have different problems. The UK economy is also slowing down. A lot has hit business owners and consumers this month. Last month really, as April, wasn't it? Already we're into May. But in April, there was a lot of things that increased. You had the minimum wage went up. That massively hits business owners. Business rates went up. That hits business owners as well. A lot of pubs had an increase in business rates that will hit them really hard. Energy costs went up, which is going to hit everybody and mean they've got less discretionary money to spend. You've also got the threat of inflation because the tariff war could impact us. It could impact goods that we get from the EU. Who knows how that's going to play out? And we were expecting inflation to roar up because of oil prices, but they're actually dropping. So it's a total mess at the moment. But the Bank of England are expected to cut rates, and economists are expecting that they will cut 4 times now in 2025. So by the end of the year, they will have cut 4 times. And this week, on Thursday the 8th, they are expected 100% to cut rates, which will be a relief for a lot of people. Now, interestingly, I made a video yesterday and Barclays are expecting things to come down a lot faster than everybody else. So based on the fact that we're going to have a global slowdown, based on the fact that UK consumers don't have much money to spend, they feel the UK economy is not going to do particularly well. And they think that we will have 4 rate cuts by September of this year. Now, interestingly, there are 4 meetings. So that means that we would get 0.25% cut at each meeting, bringing rates down a lot faster. Now, if that happens, a few things could happen to your mortgage. Now, your mortgage rate that you get isn't necessarily based off the Bank of England base rate. If you're on a tracker, forgive me, it is. So if you're on a tracker rate, your mortgage is based off the Bank of England rate. However, most lenders borrow from bigger banks, and they borrow on something called the SONIA swap, which is a forecast of where we think the base rate will go. And if they price in that they also feel that we will get 4 cuts by September, over the next few weeks and months, I'll be pretty confident that I'll be making quite a lot of videos on rate cuts from different lenders, on buy-to-lets, on remortgages, on commercial loans, on everything. It will make a massive difference. So that's what we've got to look out for. So in conclusion, are we going to have a rate cut this Thursday? Yes, it's pretty much nailed on, guaranteed, ironclad that this week we will have 0.25% cut. That will take us from 4.5% to 4.25%. People on tracker rates will immediately get cuts. Mortgage lenders, however, will be looking at what happens to the swap rate. A lot of them have already cut rates prior to the Bank of England doing so. And so what that means is you might not immediately see rate cuts. You might not see mortgage rates drop over the next few weeks. But what will happen is if the forecasts all agree with each other that the Bank of England is going to keep cutting, and some of that will be based off what Andrew Bailey says in the press conference after. He will get bombarded with questions about the tariff war, about the value of the pound, all these different things, about the UK economy. And from that, the economists will decide if they feel the Bank of England is hinting or implying that we're going to continue to move rates down. Now, quickly, how fast, potentially, if everything went wrong, could things go down? Well, in 2008, here's where we were. In October of 2008, we sat at 4.5% interest rates, exactly where we are now. That's the base rate with the Bank of England. But by March of 2009, which is barely 6 months and probably only around 5 meetings, we were all the way down to 0.5%. So things can change very, very quickly. I'll update you on all the movements and all the expectations as they happen and as things change. So that's a reason to subscribe to the channel. And also, do make sure that you do like the video, do subscribe, and make sure you share this with anyone that needs to know what's going on. I'd like to know your thoughts and opinions in the comments. Do you think Barclays could be right? Do you think we could be to 3.5% base rate as soon as September? Do comment below and let me know your thoughts on that. Do check out all the other content as well on the channel, including this video right here.